Alpha Fam, Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the channel, if you could please give us a like, comment, and a subscribe, we really do appreciate the support. So let's get into the market, guys. So we're getting a good push in the market. Bitcoin's actually been green. I think it's like 7-8 days right now, guys. It's actually pretty impressive. And honestly, crypto through this entirety of this conflict has held and shown a immense amount of resilience. All right, guys. And the big reason I think we're getting the push today is for a couple of things. One is we got the push initially started because of the sanctions with the crude oil with Russia has been lifted from the U.S. So this has brought some relief into the energy markets. There has also been reports that Iran is now allowing their tankers of oil to move through the Strait of Hormuz. So what we're seeing is crypto starting to get a nice reaction, and we're not just from crypto, guys. And we talked about this the last video, and it's the stock market, guys, and how much weakness it's shown. We are having a nice bounce in the stock market today. S&P 500 right now is up 1.24%, and I waited intentionally a little bit longer to make this video after the U.S. market opened to get a real gauge on direction. And it looks like we're going to get a clear direction, which is recovering to the upside, especially on a Monday, guys. Typically, Mondays are historically bearish. So I really wanted to kind of see what was going to happen. We have a big week this week, guys. And what I mean by that is we have multiple things happening. The biggest one is going to be PPI, but not just PPI, Fed interest rate decision. I don't think they're going to cut rates. It doesn't look like they're projected to cut rates, but it's not as much about rate cuts. It's more about what they say. And especially this is the first, announcement or conference that they've had since the conflict has started. All right, guys. So this is very interesting, and all eyes are going to be on this. And typically, guys, what's interesting too is you typically kind of dump into these events. All right, guys. But what's interesting is we're pushing up right now. So there's a lot of eyes on this event, and I'm very interested to see what happens with it. And we're not only getting a good push on that, and what was interesting was we started this push last night on futures. All right. So when the futures market opened up last night at 6 o'clock, that's what kind of caught everybody off guard, because I think a lot of people expected futures to open up weak, and then they started pushing up on these announcements. All right. And this is starting to look good, guys. And if you come over here to the daily, like I said the other day, this could be a descending wedge pattern. I mean, sometimes these things start to look like they're showing weakness, and then this thing actually is building a post, and it's actually getting ready to break out. And this could be, in fact, what's happening. We do need to reclaim some levels, one of them being specifically the 50 on the 4-hour. You can see on some of the smaller time frames, we've already reclaimed it, retested it, and pushing up. This looks bullish. On the 2 hours, you can see we've reclaimed it. We pushed down, found support, and pushed back up. It looks pretty good. Same thing for NASDAQ, guys. You can see it. This is on the 2-hour, and you can see this is on the 4-hour. It's just now starting to get to reclaim it, but you can see it's being used as resistance. It's been resistance every single time. So to see a strong reclaim of this is going to be extremely bullish. All right, guys. What's interesting is Bitcoin dominance, which is, you can see here, it broke back above on the 50 and has come back below. You can see on the 4-hour, it finally broke back, has rejected, and is starting to move back down, which is what we want. Alts have been showing an immense amount of strength, guys, and they're greatly outperforming Bitcoin. And a lot of projects are also making announcements too. So this is also something that's kind of interesting. That's kind of happening at the same time. So with that being said, we're seeing a lot of strength in the crypto markets. We're seeing a lot of adoption continue to happen as well. Like we just had the Ethereum staking ETF go live for BlackRock. Like there's just a lot of adoption happening, guys, and it's happening really quick, regardless of the war conflict. All right. And what this is going to happen is price hasn't caught up to this adoption. All right. And what we've gone through is an immense amount of FUD for the last 3 or 4 months. And what we're now starting to see is some of these narratives and some of this stuff really starting to take over and show a lot of strength into the markets, guys. So looking at USDT dominance, guys, you know, I like to talk about this. We have broken back below the 50. All right. This is the first time we've been below the 50 and closed below the 50, guys, literally since back over here when we broke back above it. So basically since over here on this date, which is January 26th. So we've been above this thing now for 54 days. All right. confirmed downtrend. All right, break a structure. You can see this thing when it made this high, it failed to make another higher high afterwards, and then it's been making higher lows and higher lower highs. And you can see, guys, this is a bearish market structure. We want to see this thing kind of trail down. All right, and remember, as this goes down, your bags go up. Do I think we're out of the woodworks yet? No, I don't. All right, and I'm going to explain why. Yes, I think we're going to get this rally is going to continue for a little while, and I think we can consider this like a relief rally, but you don't want to get trapped off yet. Don't get over bullish and be patient, especially because what we could see happen is this, guys. This thing starts to trail down, and then all of a sudden, as this thing comes up, this thing starts to come back up. All right, guys? And then people get trapped off, all right? And then longs get liquidated when this happens because people get overly bullish and start taking positions a little bit too quick. And again, guys, like I said, I think 2026 is going to be a good year, but there's still, I think, a chance for them to do a spring. And as this accumulation range is get made, you have to understand too, Bitcoin's in a major area of resistance right now, a major area of resistance. Last time it came up here rejected, we are above it, but we could expect even Bitcoin maybe to trail up a little bit higher. Maybe it comes up here to like the 80s before it rejects, and then when it rejects, it comes back down to the lower levels again. When it does that, depending on what happens during that period of time, you could maybe even expect a spring where they deviate outside the trading range real quick, and then it comes back in immediately, reclaims, and then this gets closer to what? May. And I've been talking about this for a while, guys. As we get closer to May, I think that's where the breakout happens. As Jerome Powell gets replaced, all right, we get farther removed from this conflict, all right. I bet that by that time the war is going to be announced as over, all right. Then you can expect the markets to really start taking off around that time, all right. And that's doesn't necessarily also have to happen at that. I'm not going to give it a this is a clear end date, but nobody's going to care looking in Q4 when the breakout happened, all right. And that's not what you should be worried about. What you should be focused on is accumulating blue chip assets when these occur. When we come to the bottom of these ranges, guys, and we come back here and we come down there and retap this liquidity zone, set your limit orders, and this is where you build your positions. All right, guys? And if we don't come back down there and we do something like, we start showing immense strength and we get confirmation of a breakout and Bitcoin, reclaims the 50, comes back down, retested as, finds support on it and then starts making higher highs and higher lows, then you can adjust your thesis and your strategy at that point once you get confirmation. All right? Again, guys, this don't want to be premature with this, guys, because what I don't want to see happen is people get overly bullish, start taking too many positions, and then the market starts to dump on them. They panic, and then they end up selling at a loss, or they get liquidated, or something happens when all they had to do was just stick to the plan. Stay stoic, understand what's going on. You just don't understand these markets, guys. As long as you study the Wyckoff, guys, and remember, where I think we're in right now is this accumulation range, all right? And these springs, again, I've said this 100 times, they don't necessarily have to happen at the end, all right? This could very well be a valid spring. This could be very well its retest, all right? And then we could have already have done this. And again, there's two of these schematics, guys, and sometimes they don't have enough power, or the market makers and exchanges, when they try to, liquidate longs, they don't have enough strength to actually create these spring effects again. So sometimes they don't happen. So you want to be very stoic and be very smart about how you play this, and just don't get overly, you don't want to put yourself in a bad position, especially when you can just be and hold a little bit of, just be a little bit patient, allow the markets to come back down, let your orders get filled, and if they don't and you get confirmation, then you can go all in at that point, guys. Because I do think that this is going to be a short-lived bear market, all right? It just depends on how you look at the markets, guys. If you're like a 4-year cycle person, these bear markets typically last between 300 and 350 days. I think we're kind of rounding about the edge of like 200 something days right now. This definitely being an accumulation zone makes a lot of sense. We get closer to the 300 days, which I think it's like, if you look at that, it's closer to like, August, September, and then breaks out, goes into Q4. Still kind of lines up with the same thesis. All right, guys, what's going to end up happening, I think, with a lot of people is they're going to get left on the sidelines. It's just what's going to probably end up occurring. And that's what ends up happening with a lot of times with these markets, where people don't trust moves until then they, have no choice but to FOMO in. All right. You just don't want to be in that side of the things either, guys. Always want to wait for confirmations, be patient, be stoic, understand these things. And again, guys, if this is the first time you've ever seen some of my content, My name's Coach JM. I've been a digital asset investor for over 5 years. And if you want to learn this stuff, how we incorporate macro, fundamentals, technical analysis, and how we combine it together, and if you're looking for a place where you can get coached and mentored by people like me, and if you want to have a place to network with other traders and entrepreneurs, click the link below, guys. We'll see you inside.